Hello again, everyone. Welcome back. In this weekend market update, we're going to start off here by taking a look at the SPY. So we're going to start off with the daily, the weekly. The SPY was down 11 cents on Friday and up 96 cents on the week. So with crazy amount of volatility that we had this last week, we only changed by 96 cents on the week. So it's an inside, slightly up week here on the SPY. It just continues to trend and trend and trend so far, but I think there are starting to get to be some cracks in the armor. When you look at this weekly view, you can look at this blue line is a 10 exponential moving average of the weekly chart. Okay, we haven't had a weekly close below the 10 EMA since right here, the week of April 20th. It's been, I'm looking down my notes here, 29 weeks without a close. And you can see we've had other major stretches in the past, whether you look at 23 into 24 or whatever, but we've had numerous closes below the 10-week moving average. We haven't had anything. And I know people are measuring and looking at the 50-day. I always use the 55-day. It's pretty close. I'll tell you, when I say cracks in the armor, 2 out of the last 6 days over here on the daily chart, 2 out of the last 6 days have, on an intraday basis, went below the 55-day moving average. Okay, we hadn't had one single day that went below the 55 until all the way back here on May 6th. Okay, so pretty incredible. It may be a sign that the market is getting tired. We are ready for a little more of a pullback. I mean, my gosh, we haven't done anything in terms of any kind of decent corrective move for this entire push to the upside. So we'll see what happens. So where do we sit with the Elliot wave picture? I'm trying to make sure that, I think that's all I wanted to say about that. Let's take a look at the Elliot wave picture. So right now, I'm thinking my primary count is saying that we're in about to complete, if not already completed, minor wave 5 of intermediate wave 3, which implies that we've got a major corrective intermediate wave 4 coming. Now, that, this is my primary count. My alternate count says that the high that occurred on October 29th is the end of a little minute wave 5. Okay, it could have ended here. And the reason I'm cautious about that is just the way this price action has been over the last week and a half. So here's what I'm looking at for a fifth wave. With the volatility that we've had, this looks like a series of zigzag, 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 possibly another zigzag for the fifth wave for an ending diagonal pattern for the fifth here on the SPY. Now, this was pretty bullish the first 130 minutes. This is a 130-minute view, 3 bars to the day, okay? So pretty bullish candle to start off on Friday. And then we kind of just paused for the rest of the day. So do we continue to get full follow through to the upside? Or do we come over here and take out this, November 7th, that was a Friday, November 7th low? If we take this low out, then I'm moving to the alternate count that says, the fifth wave of intermediate wave 3 is in. But I'm not doing that unless we take out this low. So we'll see I think this coming week is going to be key. I know we're going to get Nvidia's earnings out this week. We got a whole bunch of retail stocks that are going to have their earnings out. So here's what I said with the SPY. It's going to be really, really interesting to see how this plays out. We definitely had a little bit of divergence here on the RSI on the weekly, but sometimes that divergence just disappears. We'll see. Okay, now the other thing that's giving me pause related to this market, and I've talked about this before, is Bitcoin. Okay, so here's the Bitcoin futures. Look what they did here. Now, I had identified quite a while ago this support zone down in here. And, this was tied to the June low. This candle right here is the June low. We had a little one here in May, or I guess that was June. Both of these lows are in June, the month of June right here. Okay. Well, we came down, we tested it, we bounced. Then on Thursday, we broke and closed below that support zone, and we got continuation in here. It just looks to me like, you're not going to, it doesn't look like we're going to get support until we go quite a ways further down in here on Bitcoin. My Elliot wave picture, which I've been calling for, I've got it on actually on GBTC because I have more history than I do on the Bitcoin futures. So the Elliott wave count that I've been holding on this is that we're doing a big flat. I think we're in cycle wave 2. But I do think it's a big flat, and if that is the case, this is going to be a 5-wave move down. Okay? Now, when I look at, where could this C wave end for wave 2, I think about the 4th wave of 1 lower degree. So in this zone, it can go as low as the end of the 4th wave, or we could go as short as just coming down to where the A wave ends. But when you look at what, this, that the Bitcoin has had a tendency to do over time, the pullbacks that have occurred have just been incredible. And what I really want to do is, let me go back over here, because I've taken this off a semi-log for when I'm doing retracements for percentage to get the percentage more to be accurate in terms of the actual 50% of the move, etc. kind of thing. This shows you the extent of the kind of pullback that can occur in terms of actual numbers. So let's just go from the high here, right? Around $58 to a low of like 7, okay? Over here, from a high of 38 to down in around 3 to 4. So yeah, you can, and again, this is on GBTC, but it corresponds almost exactly with what Bitcoin is doing. So yeah, we can get a huge, huge pullback in here. And, and it doesn't have to be very shallow. I mean, it can go pretty deep. So we'll see what happens in here. We'll see what kind of selling. That is what gives me pause when I look at and say, well, okay, where is the SPY going? What's it doing short term? So with the kind of risk off kind of mode that's all of a sudden in Bitcoin that's being reflected, I think it's going to be pretty much in sync. If it continues, it's going to be pretty much in sync with what's going on in the market. So let's take a look at a couple of indicators, just see what they're saying. Let me go to the daily here. Let me look at the VIX. Okay, so the VIX was down 17 cents on Friday. We shot up, got all the way up here to 23, came back down. We seem to be having a problem holding above the 20 level. We're right there on Thursday, but haven't been able to hold above it, so we'll see where that goes. The McClellan Oscillator, this is pretty interesting, and I've got this on a Google spreadsheet, so bear with me in terms of what I'm doing. This is a zero line, this is plus 250, this is minus 250. We're sitting at a minus 60 right now. So it's really, I almost hate to even say it's oversold, the market. I'm talking about, the New York Stock Exchange, okay? Down here on October 10th, minus 196. Over here on August 1st, minus 177. Back on April 8th, minus 253. December of last year, minus 300 the day after the Fed meeting. So, or maybe it was the day of the Fed announcement. I can't remember exactly, but you know what I'm talking about. So this market has got plenty of room to either be stretched one way or the other. We're just not stretched right now. Now, when I look at the summation index, though, this is pretty interesting. This is continuing to trend lower. This is a cumulative of the oscillator, all right? So when I come up here and say, well, July 14th at this peak, or let's just say 15th, and then we've done nothing but trend lower in here. We're down to about plus 329. So we're trending lower at the same time that the market from July 15th right in here has done nothing but trend higher. So a complete divergence is what is going on. And so, you sit back and say, well, is this really a key? Does this really tell us anything? Well, you look back over here to October 1st of 24, it started trending lower and kept trending. And, if you go back to October 21st of 24, back in here, the market kept trending up until it didn't. Okay, so we'll see what we get. The market's pushed for a long, long time now. And so we're starting to see some things that are saying, okay, maybe get ready. We could be getting in for a little bit of a rest or a pullback. Okay, so let's take a look at one last indicator, the high-low on the New York on Friday. There were 82 more stocks hitting 52-week lows than highs on Friday. That's the lowest reading since April. Okay, you got to go back. Here's the dates down here since April. Okay, on the New York. And on the NASDAQ, minus 286, the second lowest reading since April. So a little bit of damage being done, being reflected in terms of the move, yet the market's not even close to being severely oversold. Let's take a look at the dollar index. Let's see what it's doing. So it didn't do much on Friday, up 14 cents. Here's the picture. But it does look to me like, starting with in about the middle of the week, but definitely Thursday, Friday, we're breaking this uptrend line on the daily chart. And it looks to me like it may be rolling over. When I go to the weekly, here's where I keep the Elliot wave count. This is what I'm looking at. I think we got one more wave to the downside in here. The real question is how far and how quick is it going to play out? So we're just going to be watching for 5 waves down. But that's what I'm looking for. And if that's the case, this could be really, really interesting to play out with a declining dollar. And then all of a sudden over here on the Bloomberg Commodity Index, we have a major push for the first time above a significant push above a major resistance zone. Okay, this resistance zone's been in place for 2.5 years now, and we finally pushed above it. And the entire week, this is a weekly, entire week pushed above it and closed above it. So this has got some implications for a pretty good push. It almost looks to me like a head and shoulders bottom. I would say it looks like this. And so then you can make your own estimation as to where you think that's going to lead. Now, I'm sure it'll take time because you see how long these moves take, and these are all weekly candles. But it does have an implication. If the dollar continues to decline, commodities continue to push, this could get real interesting. Okay, and then the last thing I'll just mention is we've got Nvidia with earnings this week, right? So let's just take a quick look at that. Let me go down here real quick. So this is what caught my eye on Nvidia is the daily chart. So, well, first let's go to the weekly. We had a very bearish engulfing candle for the prior week. And then this week it was up $2.02. So slightly up, kind of weak in here. We definitely have divergence showing up, but you come over here on the daily and all of a sudden this kind of caught my eye. It almost looks like like a little broadening type triangle. I don't know for sure if it's really an ending diagonal. I see like a zigzag up here. This is very short little wave 2. It's a wave 2. Is this 3? Is this 4? Where's the zigzag here? But, if you just ignore that and just say, well, what does it look like it's doing? Well, it sure looks like it's broadening out. Okay. And to me, if it takes out last Friday's, a week ago Friday's low, November 7th low of 178.91, then we're going to be in for a pretty significant breakdown, I think, here on Nvidia. And we'll see if that happens this week. Okay, that's it for this weekend. Everyone have a great week. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button there on the YouTube channel. And head on over to joehenches.net. Check out the website. Everyone, have a great week. We'll talk to you on the next video.